Hello everyone and welcome to Fluent Financial's What You Should Know for the week of May 2nd. My name is Mike Lennies and I'm the Portfolio Manager at Fluent Financial. This past week, U.S. equity sank in volatile trading under the weight of disappointing tech earnings and a concerning GDP report. The NASDAQ Composite fell 4% on both Tuesday and Friday, settling down 3.9% for the week, while the S&P 500 slid over 3% and the Russell 2000 dropped 4%. All 11 S&P sectors were negative, with consumer discretionary falling over 7% after Amazon reported a surprise $4 billion loss and forecasted weaker revenue growth. Both Facebook and PayPal were winners last week in that their stock prices reflected oversold conditions prior to their earnings announcements and rebounded once the announcements were made. Interest rates edged lower, with the 10-year Treasury ending near 2.89%. Again, that's the risk-free rate. In economic news, there was a negative 1.4% contraction in the first quarter GDP, and this is largely attributed to a widening trade deficit and slower inventory investments by companies. But still, recession fears were stoked by an economy hampered with high inflation and labor shortages. If the Q2 number that comes out in late June also shows a negative GDP number, it would make the second quarter in a row of negative GDP, and that would be an official U.S. recession. In other economic news, consumer spending and business investments remain solid, with durable goods orders rising 0.8% in March. U.S. consumer confidence fell slightly in April, as more optimistic future expectations were offset by negative views on current conditions. The March core PCE price index showed a slight easing from the prior month, but persistent inflationary pressures were evident as employment costs jumped by the most on record in the first quarter, and the personal savings rates plunged to the lowest level since 2013. Looking at commodity prices, oil rebounded 2.5% last week, and natural gas jumped 12% with the ongoing Russian invasion of Ukraine. Year to date, the Dow Jones is down about 10%. The S&P 500 is down almost 14%. NASDAQ is down 22%, and the Russell 2000 is down almost 18%. Looking to the week ahead, U.S. stocks are hovering around the lows of the year, and skittish investors receive little relief this week with the FOMC meeting, jobs data, and PMIs on the calendar. The most important event this week is probably going to be on Wednesday, as the Federal Reserve is expected to announce an interest rate hike of 50 basis points or 0.5%. But more importantly, any decision on reducing the balance sheet could sink markets further. In other economic news, labor markets will be updated with the arrival of the JOLTS report on Tuesday, ADP on Wednesday, and the monthly non-farm payrolls coming in on Friday. With weekly jobless claims at historic low levels and openings still high, a strong addition of nearly 400,000 jobs is expected, and we will be closely watching that number. Feel free to leave comments or questions to this post. Click the like button and share it if you felt that it was informative. Subscribe to our YouTube channel and visit our fluentfinancial.com website for further information. As always, thank you for tuning in to What You Should Know, and have a great week.